Have you ever struggled on raising capital for your fund or your startup? Or maybe you wished you could provide an edge to potential investors that just makes them fall in love with your fund or your opportunity way more than your competitors. Well, in this week's episode of Making Billions, I bring on David Sillaman. David is a national expert on opportunity zones, and he is going to tell you how you can use it in nearly all type of investments, not just real estate. See, this gives you and your investors a no-brainer experience when assessing potential opportunities. So creating opportunities for investors and raising capital effectively are all skills we need in our pursuit of making billions. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, David Sillaman. David is the founder of Eazy OZ Opportunity Funds. This guy is about to blow your mind on how to leverage the power of opportunity zones and how it applies to nearly all investment funds, not just real estate. So what this means is David is about to drop a ton of wisdom on how you can save massive capital on nearly any project or investment just by structuring it better under this government-sanctioned program. So, David, welcome to the show, man.
What's going on, man? It's an honor to be here. Huge fan, huge follower. Love your podcast. So I'm just excited.
Yeah, awesome, brother. Yeah, it's so good to have you. You're very kind. You know, I've heard you speak and talk about opportunity zones, and it absolutely blew my mind. I honestly thought, just like everybody else, opportunity zones is this real estate thing that's great for real estate investors or real estate funds. But what about the rest of us? And you got up there and said, oh, hang on a minute. This is not just for real estate. That is actually a misconception. Now, before we get into all of that, and you're going to hang in the end where he gives these absolutely mind-blowing tips on how to use opportunity zones for your private investment and venture capital, private equity. I mean, this is crazy. But I think we'd like to know, our fans around the world, we got almost 100 countries that are listening to this around the world. We would like to know, like, how did you even get into this, and where did this start for you?
I got started actually in the very beginning. I was prior to the opportunity zone space. I was working with different companies. I was doing consulting, change management, private equity raising for the companies. Had some successes. Got connected into a failing real estate hotel deal down in Tampa. This was in May of 2018. We learned that the location for the hotel was in an opportunity zone. We learned about the opportunity zone program. Although it had not been formally announced yet from a statute, the IRS did put out a press release a little bit earlier. So they were at least saying, hey, this program's coming, right? So looked at it and was like, oh my God, let's make a pivot. Let's make this thing into an opportunity zone play. Did that, launched it, gave enough time from the time that the legislation came out at the end of June. We launched in July, the first week of July 9th. Our launch, according to the press release, second opportunity zone fund in the country to go live. If we would have been 1 week earlier, just a couple of days after the release date, we would have been the first. But we'll take the second. And just really shortly thereafter, got connected with the Florida Department of Economic Opportunity, worked with them, and the leadership team that had set up the Opportunity Zone Fund for the hotel was convinced to actually take the state, kind of parcel out the state into 5 key areas and set up 4 more Opportunity Zone funds to service developments in those other key areas. And then it was just game on from there. I saw an opportunity. I saw a need. I saw, a first mover's advantage, and I did everything in my power to build the right type of people and to get out there and get connected with different organizations like the CDFA, different, American First Policy Institute as an example, Liberty University as another example, but just all these different organizations, and just got out in the forefront and just started talking about opportunity zones. And one of the things about this in the very beginning is that when I first got into it and I was talking opportunity zones, the people that were in it were developers talking real estate. I was the only one talking business. And that's because in October of 2018, I actually built the first business-focused franchising OZ fund in the country, and kind of set the pathway for businesses and a fund structure to take advantage of the OZ program. And it's a vertical that I think it's, given how the program was born, which if you're a parent and somebody in your audience can probably relate to this, it was like a baby that was born. It spent the first 18 months of its life in the hospital getting healthy, came home to mom and dad, was home 90 days, caught COVID. That was effectively the Opportunity Zone program, because it took us from the date that we got the initial guidance in June of 18, we didn't get all the rest of the guidance until December of 2019. So it took 18 months to get enough guidance to do something and run with it. By the time we got the guidance, we went into 2020. By March of 2020, COVID and the narrative for businesses and utilization, it really didn't kick off until last year, really. So still kind of new, but we've been fortunate enough to become one of the largest, if not the largest, fund development agency in the country. Developed about 1/10 of the entire U.S. market for Opportunity Zone funds. So
wow, that is phenomenal, and I can see why you're on the Forbes Real Estate Council. I know. I'll brag for you, buddy. It's all good. So as you can see, David is something, a bit of an expert. And so I'm just curious, through that journey, I mean, how has that shaped your company today? How has that led to your company today? Maybe we can talk a little bit about what you got going on. I know you have something called COZA, and fill us in on some of the current stuff you got going on and how it's affected the market that you were talking about.
So obviously, the Opportunity Zone program, it's a new program. So there's a lot of growth phases that are going to happen with something that's brand new. You got a lot of markets that don't exist. You got a lot of bridges that haven't been built yet. Directory listings, secondary markets, just something as simple as like a Zillow version for Opportunity Zone properties, as an example, right? Then you've got education. You've got consulting, professional services. You've got all these different market gaps. And if you were to line up 100 CPAs, you might get 5 that really know this program. You might get 1 that I would say would be expert level with it. And it's just because it's a very heavy program to learn. It's over 1,100 tax pages, and you got to know other tax laws and codes to kind of intermingle with the OZ program. And then when you think that it's not just tax, but then also private equity, now you got everything SEC related and everything that goes along with how you go about capital raising and doing all of that. So, and then you're operating a company. So then you got everything at the state level that goes into, company operations and reportings and everything. So there's a lot to it, right? So there's a lot of gaps that are still in existence today. And that's what we're trying to serve. The biggest gap is really, truly a collective voice for the program. We've got an Opportunity Zone Extension Act that's sitting in front of Congress right now, but the program doesn't have a lobbying voice. We don't have what I would say, superstar type influencers. I'll use LeBron James. LeBron James has got a youth center in an Opportunity Zone. When was the last time you heard him mention the words Opportunity Zones?
Never.
You don't, right? You don't hear like any of these football players that give back to, or have foundations in areas that they grew up in that are now designated Opportunity Zones. Rappers, musicians, the list goes on and on and on, right? There's not a voice because the voice isn't educated. So we start looking at all these different problems, and the first root of it all really is education. So what we sought out to do was we wanted to put together a formal education program on where you can come in and not know anything and walk out as an expert. It had to be self-study. It had to be testing that was involved, but it had to be thorough enough to really, just be that one, hey, if you're going to learn this program, this is that education. That's the Certified Opportunity Zone Advisor. Now, we built that doing a couple different things. Number one, we did it in conjunction with the America First Policy Institute Center for Opportunity and Liberty University School of Business. Number two, it wasn't like it was just like myself where I just said, oh, let me just create a course and kind of bring this stuff all together and teach you, John, Jane Doe. No, we actually brought in 6 of the original founding fathers under the Trump program administration that wrote the program to create the course. Our foreword is literally written by Daniel Kowalski, who served as the senior advisor on the whole program. He was basically considered the grandfather, architect of it. So very instrumental in creating a proper education. And then the rest of it really has been now looking at some of the bridges. I look at the investor market space and I say, what really drives a lot of this ecosystem is it's capital gain driven. So it's a very niche type of dollar, but at the same time, the market cap on that niche dollars in the trillions. Last year it was $9.2 trillion in eligible capital gain money. So it's a big, big number in unrealized capital gains that could have been realized for the program, right? Now, no one's thinking we're going to see 100% saturation rate, but we've seen 150 billion since the program started. So it's also not a small number in the short few years that it's really been in existence. So what we've been doing now is focusing on that and saying, okay, how does that number equate to demographics? So we looked at it and said, well, really it's active and passive investors. So active are, I'm setting up a fund, I'm doing it, I'm playing the game. Passive is, I've got capital gains, I want to invest in your fund. Both of those serve different markets, both have different needs. Both are, one's looking for money, one's got money looking for assets. Then you got the asset market, the developments, the businesses. Great. If I take advantage of this program, where do I find the investor at? Do I need to go do the pitch and road shows? What am I doing, right? Where do I find them? How do they find me? So there's still all these break points that exist within the ecosystem, and that's what we're trying to one by one kind of serve.
That is something else, man. So, and now you have this certified opportunity zone advisor program that really, yes, people can reach out to you, and you've obviously have helped a huge portion of the market to really get into this, be it private equity, real estate, venture capital. I mean, that's a very broad umbrella that this program can support.
Basically everything. I mean, we did the first crypto funds. Yeah, we did the first venture capital funds. We did the first franchising funds, first manufacturing, did the first Puerto Rico fund, where we took the Puerto Rico tax code in Spanish, translated it to English, scrubbed that against the U.S. tax code, created a fund that both parties could invest into. Done, pretty much most of the first in the world of business.
Phenomenal work, brother. That is great. So, tell us, maybe you could talk a little bit about COZA and this program that you have, the certification, and just so people can figure out if it's right for them, what benefits they can receive after that program. So walk us through it.
It starts off with, number one, it's all self-study. It's all online learning. There's a guidebook. There's 16 video lessons. There's 16 practice tests. One practice test with each video lesson, and then a final master exam.
Yeah.
The idea is that it was built for anybody to really truly learn the Opportunity Zone program.
Okay.
The person that's going to get the most benefit out of it is not just somebody that's, I'm kind of curious, let me come in and learn it. I mean, they're going to get benefit out of it.
Sure.
Knowledge is knowledge, right? But it's really the professional, the real estate agent, the CPA, the CFP, the RIA, the investment banker. It's all those professionals that are interacting with individuals that have capital gain, where they fall somewhere in, the river of water, that money moving, right? Somewhere they're a rock on the bed of the floor somewhere. So we want to make sure that they're trained to then be able to help them help their clients better. Now, it's training, there's testing, and then from there we've got an affiliate program that goes along with to help you earn. And then we also have a pro directory listing for professionals, and that's ozpros.org. Okay. So that way anybody that is looking for a professional can kind of find one in their area. And we have a lot of our professionals are RIAs, broker dealers, insurance agents, realtors that go through it. And the way that they benefit at the end is they've gotten the education, they work with their clients, but now as a professional, they're parlaying themselves into management teams for points on deals. So they'll come in and be like, let me be an advisor to your management team in an Opportunity Zone. I'll keep you structured just right, make sure you're all compliant and blah, 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 blah. And it's an easy in for them. And it's the only education that exists. So there is nothing else that you're going to go to unless you want to try to, read 1,000,001 different legalese articles and everybody's opinion and stuff. And again, it was written by the people that created the program to begin with. So it's strictly an educational intention.
Wow. So you could go out. So anybody who's running a fund, would it work for, I assume so, but say an entrepreneur, a startup, could they position their fund when they go out or their company as an opportunity zone investment for other investors? They can go and pitch and for those who really don't understand opportunity zones, my understanding is really where it impacts is capital gains. Maybe you can expand a little bit on the benefits that investors can realize by investing in opportunity zones versus non-opportunity zone opportunities.
The biggest benefit to this again is the capital gain, the fact that it's capital gain driven, and then the fact that it's backed through taxation, right? And the key benefits that an investor gets right now, and I'll caveat right now with an asterisk because there is an Opportunity Zone Extension Act. It hasn't been passed through yet. The expectations are that it will, and it will actually bring in some additional investor benefits. But I'm going to stick with what's set in stone right now. All right. The first major benefit is that let's just say I sold Bitcoin as an example. Let's say I had $1 million capital gain profit, right? Normally at the end of the year, I got to pay tax on that money. So I'm going to file my taxes. I'm going to pay my state, my federal. I'm probably going to be 30, 35% in the tax between both, right? What this program allows me to do is instead of just paying Uncle Sam that money, instead I can set up my own Opportunity Zone fund, or I can invest in a fund. If I don't want to set one up, I can find one that I like and passively invest into it. In doing that, I'm going to defer paying my tax. So instead of paying the tax due this year, 2023, I'm going to kick that can down the road to 2026 right now. All right. The second major benefit, though, is that as long as I hold my position in the fund, so in that investment for 10 years, and I don't come to you and exit for any reason, all right, 10 years, one day and beyond, I can realize a full step up to fair market value at time of exit. So if I put $1 million in, and let's say you've got a great business and you've got a fund that is injecting into, call it venture, right? So you're finding these businesses, you're looking at these, 5, 7, 8, 9, 10-year exits, 5, 7, 10, 15, 18, 20x returns. Imagine putting $1 million in and in 10 years it being worth $10 million and that $9 million growth you pay no tax on. And not only do you not only pay federal tax, 46 out of 50 states you pay no state tax on it either. So it's a huge benefit. Additionally, 10 years from today is only 2033. The program does not expire till 2047. So I could be positioned in the right investments and I could ride for the next 20 plus years tax-free growth. So, it's a huge benefit in that way to, and now when you look at it that way also, what does it do? It opens you up to a wide range of investors. You've got your young age investors that will utilize this program for retirement strategies because they'll ride through the 25 years, hit the exit point and be at that age. You'll have your 40, 50, 60 demographic that will only ride through for the 10 years. And they'll look at that then also as a retirement strategy. You're going to have real estate developers that will look at this as like, hey, I can turn around, come in, I can tax stack this program, which means that you can layer on all the other tax benefits from, something as simple as solar tax credits to, new market housing tax credits, low income housing tax credits, historic tax credits for businesses, leveraging the qualified small business 1202 investing. All of that is stackable with this. So you can then turn around and take a program that is going to give me tax-free growth and then enhance what that tax-free growth looks like using tax stacking strategies. It's also a program that has a tremendous amount of not only federal support, not just through the taxation aspect of it, saying, all right, we're going to give you these tax benefits, but I'm talking agency by agency support. What a lot of people don't realize is this program was not just solely an IRS initiative. This was actually something that's never been done actually in the history of our entire country. This was the first time that all the federal agencies came together in support of this program. So you've got 21 different federal agencies, 300 different federal grant programs, contract programs, loan programs, insurance programs, all that interact with the opportunity zones. HUD's got programs, USDA's got programs, FHA, the SBA, Department of Health, Veterans Affairs, they all have programs that interact with. Then you look at states, you got a lot of state budgets. I'll use Ohio because they just did a press announcement not that long ago on it, but they got $200 million they allocated just in their state budget to support opportunity zones. Then you got the same type of support at the local level. So it's really one of those unique programs that if you do it right, I mean, the return could be exponential. It's never been done. It's got a short history to it. So it's, still that right entry point. And we've got an extension act, like I mentioned, that although it hasn't passed, it will get marked up. The odds are highly in favor now with the Republican Congress that it will get passed, even though it's got strong bipartisan support. And that's going to kick a bunch of extra extensions. That's going to push that 2026 date down the road, more than likely to 2030. It's going to bring back some extra step-up benefits. So on the tax that is due, that will actually even be reduced down by an extra 15%. It's going to open up more zones. It's going to open up fund-to-fund investing. It's just going to continue to keep expanding the growth of what the program is. And when you look at the next comparable program, which really is the 1031 exchange program, it's been around 100 years, so this is just getting started.
Man, that's awesome. So I love that it's stackable. And you can use it in any area, and I like I said, I swear every time you speak, you blow my mind, man. So, and the state of Ohio has actual allocated budget for these types of opportunities. So,
and they're not alone.
Yeah,
they're not alone. Most states have, most cities have, most major metropolitan cities like Baltimore's got 50 million in their city budget to support opportunities on initiatives.
Man, so now I hope our listeners around the world have their eyes are opened as much as mine, which are saying, if you want a strategy, often people say, the question I get asked all the time is, how'd you raise all that money? Now, obviously, I don't provide any financial advice on this show, and that's my legal disclaimer that I give them as well. But typically, like, that's the thing that a lot of people, entrepreneurs and private investors and fund managers, everybody is just like, well, raising capital can be a challenge at times. But what I'm hearing here is that it's a lot less challenging. In fact, it might even be fun when everybody's saying, oh my goodness, I can't get enough of these opportunities.
Well, and I think you bring up such a valid point for right now. All right. And this is one of the most attractive things to me about the program for your audience. Sure. Is we have a very inverted yield curve. Mm-hmm. From a supply demand standpoint. We have exponentially more eligible capital gain demand investor base than what we actually have available supply to invest into. And then you multiply that fact by the gap in education of saying, okay, I have a capital gain. What do I do? Where do I go? Who do I talk to? Right. So, and then you multiply that fact by one of the rules is that when you do have a capital gain event, you're on a time clock. So kind of like when you're doing like a 401k rollover and you're on a limited time clock, you only have a 180-day window to make a decision with capital gains. Now, there is a caveat to that where if I sold real estate and a K1 is issued to me at the end of the year, then I still have 180 days. It's just when my 180 days start. If I sold Bitcoin, it'd be 180 days from today. If I sold the same real estate, but I get a K1 at the end of the year, it's 180 days from December 31. So it pushes me then into June of next year, even though I sold the property, January of this year, right? So one asterisk is LLC K1 real estate. But other than that, 90% of the populace that sells stock, sells crypto, sells a business, they have 180 days. They got to get educated. They got to figure out what to do and do something or just pay the tax. And so it puts the investor on a time clock. And then you look at and say, okay, well, demand. All right, fine. If I set it up, like, if we build it, will they come type thing, right? If I set one of these things up, what do I have to do? Am I going out? Am I doing road shows? Is it the traditional, and the thing I think I've noticed with this is that you've got a mixture of kind of, some of the old in that, it's not necessarily so much road shows as much as it is like family office type forum shows, that kind of stuff. Right. But then you also have a lot of the new type stuff where you can jump on a podcast, talk about your opportunity zone fund and end up filling, your round A, within 30 days. You can do a press release. And I mean, we've seen this where the right press release and $5 million comes in within the first week. Right. There's a lot of demand out there. And depending on where you go fishing at, and that's the thing about this program is that a lot of people, they look at it like, oh my God, there's so much information. I'm taking all of this stuff in and the details and the 1,100 pages of tax guidance. And you break it down to like the basics, right? It's either I'm setting up or I'm soliciting. So then if I'm going to solicit, where am I fishing at? Am I fishing for tuna in a lake? Or am I fishing for bass in the ocean type thing, right? What am I fishing for and where? So, and then knowing that, then you can look at the entry points. So like if I'm doing like a real estate fund, right? I might locally say, go to all my 1031 exchange agencies and be like, look, I got to, I've set up an opportunity zone fund. We've got this property right here. If you have any failed 1031 exchange clients or, has a partial 1031 exchange, they can still roll that gain into an opportunity zone fund. Maybe if I'm a business, right? My options are kind of simple. Again, set up or solicit. If I'm setting up a fund to invest into my own business, then maybe my starting point is let me go work with those, fund sale, the business sales brokers, right? And because they've got clients that just sold a business for profit, and let them know that, hey, they can roll that, their clients' gains. And so it's just kind of, you can expedite your success with the OZ program if you kind of know where to fish, have the right bait. And then again, obviously the core essentials, right? Who, what, when, where, why, and how. Those still matter, because the one thing that this program doesn't have, and you can always weed out what's good versus what's bad without a whole heck of a lot of due diligence. And I'm saying everything still needs to be due diligence. This is not designed to polish a turd, right? But at the same token, there's not a lot of prior performance history because the program itself hasn't been established. It hasn't been around 20 years. So you're not going to get a fund that says, historically we've been, for the last 10 years, we've been doing a 15%, IRR year over year type thing. Right. So when you don't have that, the next best thing then, and this is where you can kind of weed out what's good and what's bad. The starting point is transparency, right? How accurate are documents? What documents are put together, right? Like, are you giving me like a 1-page PPM, or am I getting a full PPM that's got every risk disclosure telling me why I shouldn't invest, and, the right decks and the right people and all that, so the transparency in that then also helps with everything as well. And then getting out in front of the right environments, et cetera. But from a capital raising standpoint, in my experience, I've seen and have helped raise more capital faster with the OZ program than I ever could have ever imagined going through private equity.
Yeah, I mean, when you got the thing that everybody wants, which is, I know they use the opportunity zone. You say that word probably more times than we care to, but it creates an opportunity for people at the end of the year. Their accountant says, hey, man, you're a victim of your own success. You actually did quite well, but you're going to get a hefty tax bill to prove it. And then they're going to be looking for strategies. And I'm assuming that happens quite a bit around tax season. And to be able to produce that, then people are like, yeah, like it's going to you or the IRS. Like, at least with you, it's got a chance. Yeah.
With you, you've got a chance because you can control, you can set up your own, you can control, you can basically move money from your left hand to your right hand. You still have, investment objectives that you got to do according to the program, right? Like invest in opportunity zone eligible assets, et cetera. But it gives you a lot more control and a much, much mitigated risk in my standpoint versus just sending, $300K to Uncle Sam and I get nothing for it at all. I'd much rather put it in, into a fund and take my chances with you, make a return, and it be tax free.
Wow, I absolutely love that. So yes, raising capital is a big interest of any fund manager, regardless of what it is, as well as entrepreneurs as well. So positioning yourself to just have it come to you is definitely the secret sauce. So thank you for that.
And I would give 2 key tips on that.
Please.
For that positioning yourself. Number one, unlike private equity, where you can kind of go out, put feelers out there, bring people together, test an idea, test if there's going to be any, interest there, do a soft raise, soft commitment, right? Verbal, some soft on paper. Because of the time parameters associated to, whoever has the capital gains, with the opportunity zone program, you kind of build and then do that. Whereas with private equity, you can get away with doing it first, then build, right? The OZ, you kind of want to build it if you're going to raise money, get it going as fast as humanly possible because you never know what someone's timeline is going to be. The other thing is the investor that actually has the capital gains. And you brought up the point of, I sold something today. I go to my accountant at the end of the year and I bring up and my accountant says, yeah, man, you're a victim of your own success, blah, blah, blah. I wish you would have came to me 8 months ago, 6 months ago. Right. Because the moment, like, let's say if I sold Bitcoin or I sold a business, the moment I sell that today, my time clock starts. So it's one of those things that the moment you do it, you need to consult with your tax advisor, your CPA. If you don't have one, you don't know, or you want more information, if I can give a plug.
Please.
opportunityzones.org
Okay.
would be the resource website I would say go to. It's free. You can get educated. There's a ton of free ebooks. You can learn about the COSA program and everything else. You can learn some of the other bridges that are there and resources that are there to make you successful. But, do something with it, and then find investments, learn the rules, and play the game and be successful with it.
Phenomenal advice, man. And speaking of that, and thank you for the tips. I'd just be curious as we round third base and really, take it home for our fans around the world. I'm wondering if you could share some of your most helpful tips that, students in your program or just people that you've helped. What are some of those key takeaways that can give our fans around the world that competitive advantage? Maybe you can share with us a few of those that will really take them the distance.
The first one is understanding the power that you can do with this for business. With this particular program, actually just understanding the power of it in general. All right. It's easier for me actually to tell you what you cannot do than it is to try to play the what if scenario by scenario. Can I do this? Can I do that? It's very simple. They're called sin businesses. Okay. No golf courses, no casinos, no ABC. In Virginia, they're called ABC liquor stores. So where you go in, you buy a bottle of alcohol, you brown bag it out. So no alcohol liquor type stores. All right. Nothing related to the body in the sense of like sun tanning, massage parlor, strip clubs, anything to that nature. Beyond that, blue sky. Blue sky. So that's number one, knowing what you can and can't do. Don't box yourself into just because you are driving down a road and you see a sign that says this development's in an opportunity zone. Don't think for a second that your franchising business model, your manufacturing business model, whatever your business might be, odds are you can take advantage of the opportunity zone program. Okay. Number two is understanding how to take advantage of the opportunity zone program. This is where we have this conversation, and it's kind of the fundamental starting point for the COSA program. When you break this program down, and like I mentioned earlier, you're either setting up something, because the fund is the reporting vehicle. So everything about the program starts and stops at the opportunity zone fund. Like if I just had capital gains and I liked your business and you were an opportunity zone business and I just wanted to give you $1 million as an investor, I could do that, but I'm going to get no benefit with this particular tax program. I'm just going to get whatever my spread is that you're offering me, and I'm going to pay tax on it. Okay. If I do it via a fund where the fund is the investor into your business, then I get all the benefit in the world. So understanding the importance that the fund is the reporting vehicle. It makes the connective dot between you and me with the IRS. So it's absolutely necessary. So with that, you're either setting up a fund, you're soliciting a fund, or you're doing both. So when you look at this, when you're setting up a fund, what you've got to look at then saying, what am I setting up? Am I an open fund or am I a closed fund? If I'm an open fund, I'm raising money. Odds are I've identified a good business that I want to invest into, maybe multiple businesses. Maybe I've got an idea. Maybe I'm putting together a portfolio strategy. But whatever it is, I'm raising money for. That's open. And understand that that's a private equity raise. You need to not only follow the opportunity zone rules, but you also need to understand if you don't have a good securities attorney that knows private equity, you're going to be limited. You're going to have a type of raise that you do, the type of investors, all the stuff that comes with private equity. And I can go through it, but then it's going to create another hour of podcasting. All right. So understand that open funds are private equity. If I've got capital gains, then my option is set up a closed fund if I don't want to just invest into one that I like. Okay. And I can do that. It's a viable option. I just have to do it with myself and somebody else, but I can set up a vehicle where I have controlling interest and I control the movement of money. All right. And it be a fund. So that's a closed fund. If I'm a business, and it doesn't matter whether I'm a real estate development looking for funding, so I've got the ground, I own the property, and I just want to get it developed, or whether I'm a legitimate business, maybe I'm manufacturing or whatever it might be, right? But you can have your own fund and you can be open to other funds as well to be investable into you. The strategy for businesses and the winning strategy, and I love this over venture capital, and this is the big takeaway, all right? And this is why I think that with a little bit more time, OZ will flip venture on its head. Because of the ability for the business owner to ultimately, at the end of the day, retain their equity. See, unlike standard private equity and venture capital that comes into businesses, Number one, they're looking at an accelerated exit timeframe, typically between 4 to 7 years, depending on what the VC valuation models and the DCFs come out at, right? You know this, you've been down that world, okay? And then how does that exit created? So great, we want to do this in 4 to 7 years. How do we convince the business owner to do it? So what are your options? Either you're going to borrow, which is debt, to buy us out, or you're going to go public, or you're going to sell, right? All three of those options may not necessarily be conducive to being the best option for the actual business owner, right? The Opportunity Zone program, number one, is slightly longer. It's 10 years. Number two, for a business owner, it allows a business owner to create a structured buyback agreement. So that way it creates a cleaner exit, because the fund is not necessarily trying to force a business owner to go public. They're not necessarily trying to force a business owner to sell. What the fund cares about is just simply creating a clean 10-year exit, so that way it's tax-free for the investors in the fund for their exit. Because the fund is just really just a bridge, right? Money comes in, reports, money goes out. So we want that money to come back in, be tax-free, go back out to the investors tax-free, and then close up shop, and now we're no longer a fund. So, one of the biggest mechanisms for businesses and business owners is structuring and setting up their own fund that raises the money, supports investing in expansion of their own business, maybe parlays that with a model that allows them to expand into other businesses that help support their growth of their business, right? Use proceeds from sales to create what a structured 10-year buyback would look like. And now you've got something that, as a business owner, yeah, I'm selling equity, but I'm selling equity to an entity that I also control, being the fund. And I've got a clean exit strategy. And so it takes a lot of that stress off the business owner's shoulders. They can capital raise in a different type of manner. And being local, they could have an Opportunity Zone fund. Let's say I was a local restaurant, as an example, right? And I need new kitchen equipment, new tables, new staff, new marketing. I need a quick $500,000. I could have a fund, I could have a business, and then I could turn around and go locally and probably fill that with local support very easily. And it's the business side is the untapped side, because we got guidance so late on businesses. It wasn't until December of 2019. By the time you figured that, and that guidance was literally 500 pages of guidance as well. So it's not like we got like 4 pages and here you go. It's 500 pages. So by the time that a business owner, which you know as well as I do, they're not going through with PhD level learning, law and tax and everything else like that. They need it broken down to like a 9th grade level. Give me the in, give me the out, give me the fast. How do I make money on it? How do I grow it? How do I utilize it? This and that. The business adoption of this program really started last year in a big way. So we're still very early in, but it's also the fastest growing segment of investable dollars, because people are looking at real estate right now, and as turbulent as what it is, and everything that's going on, and saying, wait a minute, can we trust that there's going to be a market to leverage with when we think? And is the equity going to be there? Are we going to be able to get the rents? Are people going to be able to afford it? Just a lot of the turbulent market conditions that we're in right now impacting valuation models for real estate, which means that if I can look at something alternative that doesn't have a cap, because every real estate deal is capped, right? I'm only going to give so many units. I'm only going to have so many leases. A business has no cap on earnings potential. So I would say that, if you've got a business, if you're thinking about business, if you're thinking about venture capital and utilizing this program to say, okay, let me set up an Opportunity Zone fund that's going to focus on investing into businesses. That's a strategy that can be done. And just utilizing VC from the OZ. The only designation is really the age of the business that you're investing into. So basically any business is January 1, 2018 or newer. So that's OZ. And then number 2, location, right? Being physically operating, being located in an Opportunity Zone. Then from there, as long as they meet the location, then there's a few other small aspects. They're called safe harbors. But once you understand how that relates to the business's tangible assets, the business's personnel, and the business's non-qualified financial income at the end of the year, you easily can use an Opportunity Zone fund for venture capital purposes and do it all day till the cows come home, and do it in a market where you're not saturated. See, right now, private equity, everybody, it's the big rave right now. Private equity, set up your own fund. Everybody and their brother's getting into it. Not everybody and their brother's getting into Opportunity Zone. And when you look at, VC and private equity, there's probably 7 funds that exist in the OZ space You probably can count 7 just in one networking group related to private equity, right? So a big difference in all of that. And then that also equates to how fast you can capture investable dollars in too, because now you're coming in, you're one of a few, one of one in a blue sky market that's very niche with capital gain, with a lot of benefits that are stackable. You can raise a lot very quickly, and that's what we've seen done.
Man, that is, boy, you got me excited. I was getting goosebumps here just thinking about all my investment thesis. And yes, for a guy like me, that does get me excited. So thank you for that. As we wrap things up, I mean, that was phenomenal. As we wrap things up, is there any final comments, anything at all, maybe ways people can reach out to you, get a hold of you, any other last words?
So I would say there's number one, education, right? I always go back to that being the core foundation. Understand how to play the game, get activated, do something with it, right? And be successful. Have a positive testimony. And then share your testimony. Use your voice to help consolidate with other voices to give a voice to the program, because that's what's missing, right? It doesn't have a voice. So for education, that's our COSA program. It's ozadvisors.com. They can also get to it from opportunityzones.org. All right. For getting activated and saying, I want to do something, whether it's setting up a fund, whether it's an open fund, whether you've got capital gains, you want to set up your own closed fund with your own money. Maybe you're a business and you just need help posturing and positioning yourself to get in front of the right type of investors, whatever it might be, get activated. We can help you with that. That's eazyoz.com, EAZYOZ.com. Again, you can access that right from opportunityzones.org. That's kind of like our airport, our terminal, right? If you're in real estate, if you've got a listing, we've got some marketplaces like that. But again, you can kind of access that. The big things are just education, activation. And then once you start doing something, join our Opportunity Zone Club. We've got 6,500 members and growing. We educate twice a week on the subject of opportunity zones. We do a lot of networking. We do a lot of deal analysis. What if? It's free. There's no cost to it whatsoever. And that's opportunityzoneclub.com. And again, you can get to that from opportunityzones.org. So kind of get a couple different resources there depending on where you're at. But the big one is education. Learn the program. If you're in finance, private equity, real estate, business, you learn this thing, you're going to have probably the same aha epiphany moment I did and realize, oh my God, you'll never again have this type of opportunity in our life. Never again. It's a new financial market space, a brand new financial ecosystem being built right in front of our eyes.
Well, David, you are certainly an expert in this area, and you're giving me that aha moment as well. So, as I wrap things up, just to summarize, know what you can and can't do, get educated, just like David said, and number two, just understand the importance of using Opportunity Zone in a fund or startup structure. And then number three, just learn how to make exits more effective using those structures. See, using these aspects of tax efficiencies to also raise capital are all skills that we need in our pursuit of making billions.